Hello traders, this is Blake Morrow with ForexAnalytix and you're listening to the week ahead video for June 17, 2018. Hope you guys are having a great weekend, and before we get started, I want to mention a couple of things. First and foremost, for those of you that use ForexAnalytix, the new version of ForexAnalytix will be the one we've been working on, our beta version. It's going to be released over the weekend. So when you log on Sunday after the markets have opened, you should be viewing this version of ForexAnalytix. We've been working really hard on getting this version out, so it should be released going into the end of the weekend, and I'm very excited for all of you to enjoy this new version. Now, for those of you that, and another announcement I wanted to make, for those of you that haven't signed up, you're probably going to want to sign up soon, if not like today, probably here in the next week or two, because first of all, you can try ForexAnalytix for $1 for 10 days. All you have to do is click on this button and then just go through the process of registering. You'll have a $1 10-day trial. Download the mobile app, whether you're using an iOS or Google Play or Android operating system, excuse me. Download the mobile app and see what we have to offer, because prices will be going up here in the next couple of weeks. Our prices are very competitive, and they have been for the last year and a half, so we're going to raise the price of ForexAnalytix. But for those of you that are involved right now or prior to the price increase, you're going to be grandfathered in, and you're going to be able to enjoy ForexAnalytix for the prices that you see today. So make sure you get involved today. All right, so I just want to mention that. I'm pretty sure I mentioned it last week, but I wanted to make sure I did so again today. All right, now last week was a very busy week in the markets. We had pretty aggressive move in the dollar by the end of the week. It was the FOMC meeting and then the ECB meeting, and really it was the ECB meeting on Thursday that reversed course of the euro, which in turn actually supported the dollar. And if you look at the euro dollar and the price action on Thursday, you can see that big bearish engulfing candle. Now, we didn't follow through on Friday, but I'm going to tell you guys, when you have a really shallow retracement or a bounce and a move such as this, you can see the move from like the 124 all the way down to 115. When you have such shallow retracements like this, like in this case we only bounced to 118.50, chances are the follow-through is going to be fairly aggressive, and you see it in a lot of different currencies. Whether you're talking about the euro dollar, you can go over to the cable. Let's go to the daily chart and the pound. You can see this was actually a 24% retracement. That's all that was. We didn't even get to back to the 200-day moving average in the cable, which now exposes some downside in some of these currencies. You can see in the Aussie, very similar type of situation. The Aussie actually closed on the lows of the week, and we broke through this upward sloping channel. Okay, and we closed at the lows of the week. And one of the big rejections of the Aussie over the last, it wasn't this week, but it was last week, is the underside of this trend line here, this multi-month trend line. You can see here this low, this low, this low, and we basically rejected the underside of that trend line last week, and we really followed through this week and closed on the lows. That candlestick pattern is a Morrow closing black candle, which it's a bearish candle, especially on a weekly chart. It's not a good sign for bulls. Kiwi is very similar. You can take a look at the New Zealand dollar. Let's go over to the daily. We closed on a pretty important trend line here, and with the Aussie going down, with the euro, the cable, it looks pretty bearish. Now, also, I want to show you the most bullish currency pair, in my opinion, would be the dollar Canadian. Now, I do personally have a long dollar Canadian that I'm trading, but you can see this multi-month, multi-year trend line that we broke. We are challenging or getting close to challenging channel highs. I think that takes us all the way up to about 133, but such a big breakout on the weekly, and you can see the daily relative strength. You can see how we broke out. We broke that downtrend line in RSI. It's such a massive breakout that the Canadian may hit 133, pull back towards 131, and make a move higher. Now, there has been no news regarding NAFTA, and that the way the price action is showing us in the dollar Canadian, it's actually moving without NAFTA news. So if the U.S. actually leaves NAFTA, if President Trump submits his 6-month warning, basically that we're going to back out, that could be quite detrimental to the Canadian currency, and we could really see a spike up higher. Unless a NAFTA deal gets done, that's the only thing that looks like at this point in time that's going to stop the dollar Canadian in its tracks, based on this breakout that we're seeing. But from a technical perspective, it's a very, very massive breakout in the dollar Canadian. Now, one of the other things that I wanted to point out, actually two things. I want to take you to the dollar index, and I want you to see this in my own drawing here in the dollar. The dollar index actually has what we call a golden cross. You can see this is where the 50-day crosses through the 200-day moving average, just a simple moving average. It's known as a golden cross. It's a death cross when the 50 period crosses through the 200 period to the downside. It's called the death cross. When it goes to the upside, it's called a golden cross. That's a pretty bullish sign for the dollar index. And again, I want to point out these shallow retracements. Let me see if I can do this really quick. Let me grab a fib retracement, and I'm going to go ahead and okay, you can see this was about, actually I'll make it a little bit clearer for you. It's about a 24% retracement. You can see right here, about a 24% retracement, a little bit more than that, not quite a 38% retracement, but anything less than a 38% retracement is a shallow retracement. So in this case, what I'm trying to point out is you get a move that looks like this. Okay, let me get rid of the magnet. Chances are we're going to get a move higher that looks something like this. And obviously we're challenging some resistance right now, some pretty key horizontal resistance. So if we get a good foothold above 95, that's going to be very bullish for the dollar. Now, one of the things that's actually showing us that that's very possible is look at the big reversals last week in gold. Gold rejected, okay, the 200-day moving average. We actually hit a new high. Do you see right here? We hit a new trend high on Thursday. Then we reversed, and Friday just a severe follow through in gold. And gold, frankly, looks like we could see 1240 in gold, or retest this horizontal support here. That looks very possible in gold. We could go to 12, people from 1275 to maybe down to 1240 before bouncing. And that's a pretty strong trend line in gold. But look at silver. Silver had a huge reversal, huge, after we rejected this multi-year trend line here in silver. Big rejection. Silver looks like we could open up back towards 16. With gold and silver both weak right now, that's just further confidence from a correlation standpoint that the dollar may continue to rally, at least in the near term. So watch metals. If precious metals continue to go down, the dollar may continue to rally as a result. Now, next week, as far as data goes, it's not going to be as busy of a week as this last week. This last week was just with both the ECB and the FOMC that really set the stage, and this following week may not be as busy, but we do have Super Thursday with the UK. They have their rate statement on Thursday, and Carney speaks that day, and also on Thursday, early Thursday morning, the Swiss National Bank also has their rate decision. Friday we have Canadian retail sales and inflation data that that will be coming out, and there's a couple other events that are happening throughout the course of next week, but it should be a little bit more tame. But the problem that I see is that the dollar really closed on its highs, and that may have some repercussions, and I think that the euro stopped, short of the 115 level, but frankly the market is going to start pricing the fact that that the Fed continues to raise rates, and the ECB may be on hold for a year, maybe even longer, but at least a year. So that should put further downside pressure on the euro dollar going into next week. And you throw any type of risk aversion at which I'm not saying there's going to be some, but if the stock market stalls from a seasonality standpoint, we start to see some backfilling in stocks, and we see them come, like you take the S&P, we come back down towards 2650, maybe back down to 2600 in the S&P. Any type of risk aversion like that might continue to support the dollar moving forward. So that's something else to think about. All right, guys and gals, if you like this video, make sure you click the thumbs up button on YouTube. Make sure you click the bell notification so you never miss any of our webinars once we've recorded them, any of the interviews that Dale Pinkert does for the FACE webinar, or any of one of these week ahead videos. You get notified when we post a new one. And also make sure you subscribe to our YouTube channel. That always helps us out. And guys and gals, I hope you have a great trading week next week. Thank you so much for listening in. My name is Blake Morrow with ForexAnalytix. Talk to you soon.